about how we have to bring stuff home, we have to stop outsourcing, we have to make more stuff here. In fact, Biden is bragging about the fact that we're making more stuff here. Well, if that were the case, we would be seeing a bigger increase in manufacturing employment. We're not. I mean, we can't make stuff here without the workers to make the stuff, but we're not adding in new workers, so we're still dependent on foreign workers to make that stuff. Looking at mining, 7,000 jobs added there. Oil and gas, 2,000 jobs. You would think that would be a much bigger number with the big increase in oil and gas prices, that we'd have more people working in that sector, but we're not getting a big increase in employment there. Oh, and by the way, oil prices have been very weak. In fact, as of Friday, the price of oil is about $88.50 a barrel. That is lower than the oil price was just before Putin invaded the Ukraine. Now, if all the inflation is because of Putin's price hikes, but oil is actually cheaper now than it was when Putin invaded the Ukraine, how can the inflation possibly be Putin's fault? Now, unless you think that all of a sudden we're going to have a complete collapse in consumer prices, that all the inflation since the Ukraine invasion is about to be completely unraveled and prices are about to be slashed, then you can't possibly think that we have inflation because of Putin's price hikes. The non-farm payroll report for July. And the big story that everybody was telling from the president on down is this blockbuster jobs report that blew away expectations, proves that we're not in recession, that the Biden administration is right. We can forget about these weak GDP numbers. The jobs data proves it. We've got this booming, red-hot economy with a smoking hot labor market. We're creating all these jobs. So we can't possibly be in recession with so much job creation. In fact, a lot of the investment banks now are thinking the Fed's going to raise by 75 basis points in September, not 50, given the strength in the labor market. But if you actually look beneath the surface of these numbers, and you don't have to go that deep, the jobs report tells a completely different story. I don't think what we're looking at evidences strength in the labor market. I think it evidences weakness, particularly weakness in the economy, not necessarily the labor market, although the labor market itself is not strong just because jobs are being created. So let's look at the actual numbers, and then I'll get into what lies beneath the surface that everybody is ignoring. Because I was watching CNBC pretty much all day to see if anybody was going to question.
Guys, this is why I love Peter Schiff. He tells you exactly how it is. So if you're not following him, go on YouTube, type in Peter Schiff. He does the Peter Schiff Show. You know, and he's a very influential part of why I am the way I am now. So I'll continue to promote him. Not a lot of people will ever play his stuff, but I will, and I'll continue to promote it. So after this, we're going to get into the chart real quick, and then I'm going to let you guys go.
The narrative of this super strong jobs report, and not a single guest did. Everybody accepted the numbers on face value and repeated the lie that we have this really strong labor market, and again, questioning the fact that we're in recession. Even though the GDP numbers prove it, we can just ignore those GDP numbers because we don't like that conclusion. We'll just focus on these job numbers because we like what they say about the economy. So here is the numbers. So the expectation was that we were going to create 250,000 jobs, and that would have been a lot fewer than the 372,000 jobs, which was reported the prior month, which was much higher than was expected. And not only did we beat 250,000, we beat the 372,000 from the prior month. In fact, we beat the upward revision because the prior month's number was revised up to 398,000 jobs, so an even bigger beat than what was originally reported. But the July number came out at a shocking 528,000 jobs, more than twice what had been expected. In fact, I can't remember a non-farm payroll report where we had a bigger beat.
Good mid-afternoon. T-Speaker 222 XRP Future Millionaire with the side bet on XLM and Future Digibyte OG. So, you guys are listening to the good old Peter Schiff. Make sure you go onto his YouTube, follow Peter. Get more people over there, show that support because he is on top of it and he'll keep you understanding what's going on in not only our markets but foreign markets, and also keep you many steps ahead of the inflationary hedge and the cause and what's going on in the truth. So the truth of what's going on here is that this very well could be the facade part of the pump we were trying to talk about yesterday. We never came past here yesterday and came down, hit this consolidatory tone, and you can see we came all the way down. Let me go to the smaller, well, this is the half hour. I guess I don't want to go any smaller than that. We can see yesterday we came down here and hit the uptrend. And now it's kind of just filling out this pattern. So, I mean, you can anticipate now, is it going to come all the way up here to 37.69? It's practically there. So, we're going to see. But right now it's filling out this descending triangle. So, you can see it at the end of this. And by the way, everybody keeps asking, okay, this TikTok video that I put up of this rat, it's got 12,400 views now. It's freaking ridiculous. So yeah, 12,400 views. So if you want to follow me though, XRP Future Millionaire on TikTok, you get to see a different side of me. So, but yeah, this is the ascending triangle. Now, here's what we need to pay attention to. DXY, we ended the week on what I see a bull flag, but more than that, I see a broken cup and handle, and putting in the handle in a bullish area. I feel like we're going to pump up to 107.70 something is what I targeted before the weekend started. 107.82. So we got to be very careful in crypto, because if that does pump up on a bull flag on Monday, pretty sure the whole stock market's about to drop. That looks like ass. The stock market looks ready to fucking fold. It's back testing the very key resistance spot right now. It's trying to hold that 20-day. So we're going to see if the DXY comes out hot tonight. We could have some dumpage tomorrow. Some serious dumpage. So don't get too far ahead of yourselves. Pay attention to the DXY because that's going to control it all. And if that is in fact a bull flag, like I showed, and it's making that bullish cup and handle after rounding the bottom right there, that is going to be fucking interesting. Because that would be a targeted move up to 107.82. Well, if we go up to 107.82 in the DXY, I would project Bitcoin to finally break this uptrend if that happened and find its way down to, I mean, it would be no better than 22,528. That's the best case scenario. I would almost say it would be down to that 20,900 area if the DXY comes out hot on Monday and pumps, or tonight and starts pumping. Could be a delayed reaction, but look at this pump out of Bitcoin. That volume, I want to start, now we got to wait until it gets to 23,705 before the proper, first attempt at a short could be put in my opinion. Because remember when I came on earlier this morning, I said we back tested this and it's the slow and painful route for XRP now. This is why. It's always the slow and fucking painful route because it never goes down all at once or it never goes up all at once. It always has to dick around, back test, do this, do that, bounce around, liquidate everybody along the way, and then boom, all for a 2% move. But we went 71% in between. It's like the guy who runs and intercepts it on a football game and he's at the 30-yard line. He makes it to the 37-yard line, but he ran all the way back to his own goal line. He ran all side to side, and he ran about 65 yards, but he got a 6-yard gain. That's what this is. Minimal gain, a bunch of carnage along the way. So, That's what I'm looking at here. And this looks like an extension out. And there's no volume. It's a lot of traps going on here today, though. But now we are legitimately running out of time before the futures market opens. We're 5 hours and 38 minutes away. So I'm anticipating a short to be able to be put in here at some point. You could even start layering in if that's the game you're playing. Like me, this ascending triangle, I'm looking for this to hold. So the way you would play this is you'd play shorts all the way up to the top. And then you would just play it until this pattern breaks. Obviously, we got to break this uptrend, which I put it here yesterday just in case we didn't break it, and we did not. That's what could have stopped us from even coming down a little bit farther. Now it just looks like, this just looks like we don't have enough steam here, though. Look at the volume. Why does it look so dim? I feel like the volume should be fucking popping out of my page. Like the most important thing, and it's going to be dull, but what is my volume? My brightness isn't up all the way, but I don't think that would have made that big of a deal. Let's see. I'll put the volume back on. And also, let's see where the EMA ribbons are sitting right now since I'm over here. See, that's better. That's how the volume should look. Because it should be lighting up for me when I zoom in like that. Man, it still looks dull, though. What the... whatever. We can see the volume. It's not great. It's not great. We're getting supported on the EMA ribbons on the 30. So that's bullish as long as you can stay on top of it. But let's see the 4 hour. 4 hours, it's trying. We're just not getting a lot of volume. We're not, and that looks like a bear flag, an extended bear flag. A right arm or whatever. It's just until it breaks down, we can't have this nice fall. But this really looks like we're getting ready to drop. But it all depends on the DXY. If the DXY comes out flat tonight and tomorrow, then it could lead a little credence for it to go a little bit higher. But if the DXY comes out hot, look out. Look the fuck out. Like XLM, this could be a reversal down candle. We don't know, but once we lose the EMA ribbons, it's over. That's our indicator right now if you don't know what you're doing. So, and then with DGB, I believe it looks exactly the same. Oh, DGB's on the bottom side. DGB's bearish right now. It's getting rejected by the EMA ribbon. So DGB's a little bit ahead in the 30-minute. Now we'll see if it pulls up or it's maybe a little behind. But this could be the rejection. This could be one of the ones that is ahead. So if we get rejected here, our next target's 1208 for DGB. Stay blessed, everybody. I'm going to release this to you.